guys, I just wanted to walk you through and give you some ideas of what you want to be looking at when we're doing the entry. And real quick, when this is going to be an entry for a market going short, because we've looked at our daily and our weekly and monthly, we know that the trend was down. That's the first thing we want to do, is take a look at daily, weekly, and monthly. And what we want to do to make sure that we have a good possibility of making money is we only want to trade in that down direction of the major trend. Now, you can do it if the daily and 4 hour are the only ones going down and the weekly and monthly might be going up, but at least have the daily and the 4 hour going down. Those need to be in agreement to take a position of any kind. Now, you can take it with a little more risk if you only have a 4 hour and an hour going in your direction, but I would probably try and stick with only doing it if the daily and the 4 hour are going in your direction. We have taken a look at the longer time frames, and on this position we know that we have the monthly, weekly, daily, and 4 hour going down. So as we go into the market, what we're trying to do, this is Monday of the week. What we normally try and do is look to get in on Tuesday or Wednesday. It might be sometimes Thursday, but the reason why you want to do that is Monday will give you some information that will help you get into the market on Tuesday or Wednesday. And what we're looking for, if we remember when we talked about how a candle is formed, we know that if we want to be going short, we want to be getting into the market at the top. So we know that the top of this candle from our last lessons, that this is formed at between 2 and 4 a.m. Eastern Standard Time. So what we are trying to do, I'm going to walk you through how we try and get in on this top portion, because that's where the highs are set. Now remember, if we want to go short, we're only going to be considering short positions. So we want to be getting into this as the market is going up. We do not want to get into it if the market's going down. We don't chase price. We have got to wait for it to come back to us. And the reason why we do that is so that when we enter, we cover our spread, and we also get profitable quicker when we're buying into a pullback. Now, that doesn't mean that we're not going to have losses. We might have times that it pulls back as much as we think, and then it keeps on pulling back. That's okay. I mean, you're not going to do this without having any losses. But what we do want to do is take a look at some ways to know how to get in at the best price. This right here is our Monday information. We're going to try and get in on Tuesday. So since we're trying to get in at 2 to 4 a.m., what we're going to do is look and try and get the high. And what will normally happen if we're looking to go short, we want to try and catch the high, and the high will normally be set between 2 and 4 a.m. I usually see 3 a.m. and 4 a.m. is really the highest percentage time that you see it, but it can happen as early as 1 o'clock. If you have something that has the Aussie or the yen in the pair, that might come a little bit sooner, like maybe around 1 o'clock or even 12 a.m. But if you're dealing with the pound trading in the London, the strongest, usually you're going to get the high that will form between 2 and 4 a.m. And if you're looking, if it's going to be something that you want to go long on, you're going to want to enter at the lows. And the lows will also be set on Tuesday or Wednesday. So remember, if you're going to go short, you want to be going short as the market is going into the high for the day. So that's why we are going to try and get into it in between 2 and 4 a.m. at the high, and then what we're going to do is just let the rest of the day go through. And if we do get a down candle, what that does is we're going to be in the market as we are getting, as the day is setting another lower candle. Okay, so now what we want to do is take a look at some things that we're going to want to consider on this day and what's going to help us. Now, what we want to do, some of the first things, and we'll go over other things, but realistically, the first thing that you're going to want to do is, let me clear this real quick and get this off of here. Okay, the first thing you're going to want to notice the day before is try and notice the span of the last downward move, because this was the downward move for Monday, and you could notice that we traded somewhere from like the 49.30 area, and then we had a nice move. We had a little bit of a consolidation. Then going into London's close, which is 11 a.m., we had another move down. So what we want to do, the first areas that we're going to want to take a look at taking a position, is where people got short on the last move. So one of the first things that we could take a look at is, you could notice that right here there was some highs put in here. So what would happen as people got into positions, they would put their stops above this area. So what we would want to do, one of the first areas that we would want to look to getting an entry, is as the market makers come back to stop these people out. Because one of the things that happens when the market makers need to go short, they need to find some liquidity so that they could put the large amounts of positions that they need to put on. They are not like someone like a retail trader. They have to put on hundreds of millions of dollars. So what they will do is they will move the markets to place to get some liquidity. And one of the things they do is they go to recent highs and stop out people that put stops, because if the retail market took this short here, what would happen is they would put their stops above here to protect themselves. Well, the the major money knows that their stops here. So if they need to get some liquidity to go short, they will move the price up here to stop these people out. Then they will also try and come up here, because this would also be another place where people would be trying to, they would need to stop these people out for this liquidity up here also. So what we're going to do is, as we're looking for places to enter, we want to look where this liquidity is going to be open for the market makers to actually take this short. So what's going to happen is they're going to force this market up so that they could take out these stops and get the liquidity that they need. Okay, so now what we want to do is, this little crosshair right here is actually going to be able to help you. It's a good thing to have, and that's just right here, this crosshair. And what that does is, if you take a look to the right, that you can see in the black that it's giving you the price of 49.23. This is letting you know that places that we could expect to come up to is where these stops were that we talked about, is going to be around the 49.20, 49.30 area. So that's going to be the first area that that we can look at for them to come back to try and get some liquidity. And then the second area is where people put their stops above these highs here, which is the 49.30 to 49.35 or 40 area. So what you want to do is, when you take a look at the current prices, we know that we have about 8 to 10 pips before these highs here, and then about 30 pips is to the highs that we'd be able to enter here. So what our goal is going to be, as we're watching this going forward, in between that 2 and 4 a.m., is we're going to want to try and get an entry short as they're picking up some liquidity in these areas. Now, some things that will help us figure this out is, you want to take a look at your open at your 5 GMT. 5 GMT is pretty much the 12 12 o'clock area, 12 a.m. And 12 a.m. To 1 a.m. is really considered the new day for the people that are going to be trading Eastern time zone. So that's why we like to look at that. When you take a look at other markets, like when you're trading S&P futures and stuff like that, um, what they want to do is they want to take a look at that range at 12 o'clock to 1 o'clock, because what they'll do is they'll try and figure out what the market's going to be doing for the rest of the day from that first hour. And I think that's something that you want to really know when you're looking at the range of what you want to trade. So what I would do is take a look at 5 GMT, and if you take a look at the bottom of the screen now, down to the bottom right, you will notice that the open for the 500 candle, now if you take a look, you'll see that it says 2015, this is 1229 and 0500. That's 500 GMT. That is 12 a.m. Eastern Standard Time. And the open, which is the O there, is 1.4900. What we want to do is let's go ahead and put a vertical line, and the vertical line is up here. You'll notice these are all your different tools that we'll be using, but here's the vertical line. Go ahead and press the vertical line. Now you could press it, and then what you do is you could double click on it and it will allow you to move it around. So go ahead and click it around, and then let's go ahead and put it at 4,900. So now that is the open price that we really want to look at a range to be trading from there. Now, one of the ways that you could look at the Asian range to figure out about how much it could possibly go up, and if that's one of the better things to do. If you want to take a look at what the Asian range is, I would look from about 1800 GMT. Let's go ahead and show you another tool here. Go ahead and come up to the top, and you hit insert a shape, and you could put a rectangle, and then what I would do is put a rectangle around maybe around 1800 into the new day by GMT time, which is here. Now you could notice you could put that there, and then what I'll do is in between this 1800 and the new day, which is when you take a look at the bottom now, you'll notice that it's 4 zeros. That's the new day. So what you could do is double click this, and you'll notice that there is some squares at the ends. What I would do is go to the high and the low that is during that period, and that's the Asian session that you could think that the range could possibly be. And one of the things that might help you a little bit is go ahead and take a look at your crosshairs up here. Go ahead and click the crosshairs, and if you go to the top of the range, you click and hold and go to the bottom. Now you will notice next to the crosshairs that there is a set of numbers. That first set of numbers lets you know how far left and right, how many days or how many time periods. We're on a 15-minute here. How many periods you went left and right. Now the second number is the one you want to pay attention to. The second one tells you how many pips it is. Now since we have 3 numbers there, what it is that tells you it's 24 pips, and that last one is a tenth of a pip. So that's just 9/10 of a pip. So this one right here, when you look at that middle number, that will tell you that we have 24 pips, just round it to 25 pips of range during the Asian session. Then all the way to the right, it tells you what that price is. That's the one spot 48.72, or what the way normally people would just say is just call it 48.72, because you are trading the 48.72, because the dollar before it, that's just telling you that it's a dollar, and that we are trading the spot movement of the 48.72. Okay, so now we know that it's 25 pips. What we could expect is, if you get the crosshairs again, from this open you could very easily expect 25 pips to be against you. Now you'll notice that right there is around the 49.30 area. So that would be an area that this price could very easily come up to. Now if we double that, we would have 2 standard deviations away, so we could go about 50 pips, and the 50 pips would put us around 49.50. So when we take a look at the 49.50, that will put us outside um, the highs of Friday of last week. So we could possibly be 50 pips, but I like to, it could be anywhere from 2 standard deviations all the way to 3. So 3 standard deviations away would be that 75. So that's just your 25 pips that you have here is about how much it could go against you. So let's bring this in a little bit and let's take a look at last week. Um, when you take a look at last week, you can see that from before this, we were looking from here. If you bring it in, sometimes what happens is all I did was just use the minus. This allows you to see more of a week. It's good to do that, and like we did on the larger time frames, what we want to notice is the highs and the lows of last week. We saw another high up here. Now we're not going to want to let it trade all the way up to here, but I think if we think about where we are from here, our entry, this is the 12 o'clock that we marked before. So if we got to these highs over here, you're only talking about 30 pips, and that takes care of all of last week. Actually, no, we have a little higher one here, which would be closer to 50. So what we want to do, if we're taking a look at this entry here, we want to try and maybe get an entry at these highs here, which is, if we go up 30 pips, the first standard deviation, if we go up the 25, well, it was only 25, the first 25 is going to put you right to this area. So I think we should try and look for an entry above this, because they're going to want to take out the stops above this, and that's saying around 49.30. So realistically, I think our entries could be around 49.30, and then see what happens with trading. But I would look to go short around 49.30, and then we could also go as high as 49.50. So if we got an entry around 49.30 to 50, you would be okay. You'd be okay getting into an entry around there. Let's go ahead and move forward again to where we were looking, and this is where we were looking. So what we want to do is sort of go forward. So now we've marked out, we know that we have 25 pips of range is what was in the Asian range. Now we know that the areas that they're going to probably be trying to go for is to stop people out above this high around the 19-20 areas. Then we know probably the biggest one's going to be around this 49.30 area. I would try and get positions around the 49.30 to 49.50 area, and then put a 30 pip stop on top of it. Normally, if you have a range of 25 or so, if you some people like to double it 50, but I think if you're buying at the right times, coming into the buying, if you're actually, since we're talking about sells here, if you're actually selling into the price movement that's coming up, I think you're okay just doing it with a 30 pip stop, as long as you get to these highs that you want to, because what we're doing is we're going to look for a high being set at in between 2 and 4. So now what we want to do is, if you take a look down here, you will notice as we move forward, we will see some price action here. You'll see 230. Now what we're looking for is a high to be set. Now normally what will happen is it will be a fairly quick move. Now what you don't want to do, don't get into a position as it breaks going short, even though we want to go short. Remember, we do not want to be getting into the market short as it's going short. We want to get in as it's pulling back. Now, they do this sometimes to get people going short, because sometimes if people are just looking for a quick buck, they'll put stops outside the high here, and then they know very easily they can come back and get some liquidity here. So we do not want to get in. We want to get in as they pull this market back up to where their stops are going to be for Monday's trading. Okay, so now as we go forward, you'll notice, okay, they took a little bit they went up a little bit here, and the high here was 49.12. Now, that right there happened around 8:15. So we could look between 0700. Now, that is pretty much the earliest it would happen. So 0700 is 2 a.m. and then 0900 would be 4 a.m. So we want to look between that probably 0800 is going to be the biggest one because that's 3 a.m. But let's go ahead and keep on looking forward. I think we could still get a little bit further back here. So now it's came down and we did not get a position because it did not come up high enough. Now I would not try and get in as we are going forward here because it's still only 7:30. So I would still wait to see if they set another high. Now this one, you notice that they did not go any higher than the 49.12 area. So all they did was come back and realistically just get this just high enough to get these people stopped out or whatever. So it didn't go too much higher. Now normally when you look at this, you will normally see that they will go, because that right there, when you think about it, that was only 10 pips higher. They very easily will move it 30, 40, 50, even 60 pips higher sometimes. So now this one, you'll notice that it took right off for the day, and we have gone through. Now this one, we did not get an entry, but we did walk through what we could take a look at. Now what happens is you will notice that the high was set between the 2 and 4 a.m. like we talked about, and then the low was set, let's see, these lows were set at 1600. And if you remember, 1600 is 11 a.m. So remember, you want to be looking to take profit around that 11 a.m. So that's where you're really going to want to think about taking your profits is 11 a.m. because between 10 a.m. and 12 p.m. that's when you're really going to have the close of London closes between that 10 and 12, and then New York goes to lunch. So this is going to be a place that when you do get entry short that you are going to want to start thinking about taking some profit. Okay, this is one of the entries that we'll walk through. We'll probably walk through a couple of other ones also, so I could see with different trades if there's different things to point out for you. But with this one, I just want you to remember that you want to look the day before, and what we want to do on that day before is look at what we were talking about a little bit earlier. We want to take a look at when they move this up. Remember, do not chase price. We will not get in this. If we didn't take a little bit when it got to this area here, we do not chase it. Now, it would have been okay to take a little bit here because they were going to go for stops here. Then they were also going to go for stops around the 49.30, and then we also looked at the high of last week was the 49.50. So that was the area that they very easily could have moved this. And when you think about your open, that would have been anywhere from 13 to 30 up to about 40 or 50 pips. So if it did pull back a little bit more, and if we got into the 49.30 area, that would have been a little bit more comfortable of a position. Now, I had some short on this trade already, so I really wasn't really worried about getting more in because I had some still from the week before that was going. So I was part of this, but I don't think, honestly, I would have tried to get short around that 49.15 area. I would have felt a lot more comfortable if it came up and took out maybe this 49.30 area. The areas that you really want to take a look at when things are pulling back is this didn't quite get there, but that 20 to 30 area, that's a good place that you'd want to take it. The 50s that you saw over here would be a good area, and then also 80s. I would try and remember 20s, 80s, um, your 50s areas, and then also your double zeros. So like at 4900, this would be an area that if it was above that you would want to go take a look at. Okay, so that is one of the entries. Just think of any questions you may have. Go ahead and comment here and let me know if there's any questions. But other than that, go ahead and take a couple minutes, watch this a couple times, write some notes for what you need to be doing for an entry, and let me know if there's anything else I need to clear up. All right, have a good